Welcome to the end of day review for Wednesday, the 31st of January 2024. Starting off with the economic calendar, as you can see, there was a whole bunch of red folded news events, the most significant of which was after the trading session where the Fed funds rate FOMC statement and FOMC press conference occurs. This is typically a bad idea to trade because we don't really know what the FOMC statement and press conference will say, and thus it's probably best to just not trade at all. This is fine for me because my trading session ends at the London cross, which is approximately 3 hours before when these events occurred. In terms of the New York session news that will impact my New York trading, there were two events, none of which were as significant as the interest rates, GDP or NFP, and thus I'm happy to trade through these news events with keeping existing trades open and managing them accordingly, or allowing new trades to be triggered by these news events. Obviously, I have to accept the risk that should the news event not align to my trade ideas, then obviously I'll take the stop loss, but that's just a risk of trading. In terms of the news events, we can see that it was negative for the USD, which essentially meant that GBPUSD would trade to the upside, and that's precisely what happened. So I'll give more context to that news release as we go through the charts, but I just want to start on the daily and make our way through building the higher time frame narrative and then explaining my trade ideas for the day. So starting from the daily, what we can see is we're pretty much in a big range on the daily with no real conviction in either direction for the last, I want to say, week or so. So yeah, nothing too much to take from the daily. And then from a 4 hour perspective, the key things to focus on here is that recently we had a change of character. So this previously confirmed bullish market trend is now somewhat questionable, and then obviously from a bearish market structure perspective we still need to wait for confirmation right here, which essentially means that we're trading in an unconfirmed state and we need to take some extra precautions when we do take any trades. In terms of unpacking what's happening on the 4 hour, the latest bearish leg is this leg right here, which essentially creates these pro-trend unconfirmed 4H OBs from which we can look to trade from. On the other hand, we do know that there is a pro-trend previously confirmed bullish market trend, and thus from that perspective we can look at order flow, because there wasn't a valid or clearly obvious interaction right here to suggest that we build a primary leg immediately upon this reaction. So as a result of that, we focus on the order flow, and we can see there's a change of character right here with a body break over there, and then we've got this primary leg developed. So we've got two legs to focus on the 4 hour, the first being the pro-trend leg, which is that, and then the primary pro-trend previously confirmed bullish leg, which is this leg right here. I'm just going to clear some of those markings and then we can continue. So focusing on Wednesday specifically, what we can see is that we have this one primary leg, and then on Tuesday we actually wicked this primary leg as a result of the interaction to this pro-trend unconfirmed OB. Because we're reacting to a pro-trend unconfirmed OB, which is then wicked a change of character order flow level, we can then validate a 4H pro-trend unconfirmed primary OB. So we've got two primary legs that have been recently validated. One being the pro-trend previously confirmed, and the other being the most recent one, the pro-trend unconfirmed primary leg OB. What this essentially means for our trading is that we can go ahead and validate 4H unmitigated OBs to look for interactions and support for trade ideas. Remember, we're still in this uncertain scenario, so we require three elements for any trade ideas. The first being 4H OB interaction, the second being an available substructure target, and the third being internal range liquidity available to target um, as we um, as we move towards the intended substructure target. Having said all of that, the idea for yesterday was that there's two areas to trade from and both directions being valid. In terms of long, we recently wicked this level from this 4HOB, so the longs idea would be to ultimately target this substructure, and then from a short perspective we recently interacted with this OB, with this OB's target being this unconfirmed substructure low right here. Alternatively, for a short perspective, price should come up here, reset this primary leg, while still respecting this protein unconfirmed, um, unmitigated area, and then obviously the substructure low right here will remain the target. In terms of what actually happened, let's unpack that in further detail. So what we can see here is yesterday we reacted to this protein unconfirmed primary leg, from which point actually the starting point was right here. So we reacted to this window of imbalance and then had quite a nice reaction with the idea to take out this. However, this is where the news events come in. So at 3:15 and 3:30 we had two negative USD news events which essentially pushed price to the upside, which you can see with this bullish candle. And then later in the day we had some FOMC news. While the Fed rate remained the same, there was probably something said in the statement or press conference which led to a weaker USD, and thus we can see this large bearish candle that came in while still respecting this protein unconfirmed primary OB. Having said all of that, we can now understand the higher time frame narrative and the fact that there was reason to trade both directions. Moving on to the actual analysis, in which I used the 5 minute. You could also use the 15 minute if you wanted to clean things up. However, the underlying analysis remains the same. Essentially, starting off with the latest reaction as we come into the day. The first reaction was this. This was a wick of the pro-trend previously confirmed primary OB, which then generated the secondary leg on the 5 minute. However, what we can then see is that we had an interaction with the window of imbalance and then generated a new secondary leg. So this was the secondary bullish leg and this is the secondary bearish leg. Because this is the latest secondary leg, it essentially means that we invalidate this secondary leg, and the only way to trade longs is either to reset the secondary leg or extend it. As you can see, that essentially meant that there was only one bias to trade in for the London session, being shorting, which aligned pretty nicely with everything, given the fact that now whilst we are trading against this 4HOB, we do know that there is sufficient IRL within the leg to then actually build that triangle that I always refer to, so that we know that we can actually target this extreme low right here. So that was my actual target right there, but maybe just to unpack this trade. So we've got the secondary leg. We have validated the pre-Asia high of the day. We've also validated the Asia high of the day right here. However, they're roughly the same, so it just makes sense to cover the pre-Asia high of the day. Based on that, I took that entry because it's a chain essentially. If we focus on the minor detail instead of this obvious break, you've got this is your real initial shock, then you've got a chain which then mitigated and then built forward. So this is maybe not exactly a chain, but it's associated with the extreme, which is a valid POI for me. And then obviously I got fib alignment right here, and these POIs align best with the fib, and there isn't really justification for this right here because we can't exactly validate it as an S&D flip, although you could if you really wanted to. However, I felt far more comfortable using this area with a more reasonable stop loss. So that's precisely what I did. So this is the lowest point of the secondary leg prior to the retracement into our area, which then meant this was our break-even level. Once we got close to the break-even level, we didn't quite wick it, and as a result, per my trade plan, I stuck to my rules and I didn't break even. Then as we moved into the New York session, I knew that we had red folder news events. However, I knew that they're not extremely significant news events like GDP, interest rates, or NFP, and thus I was happy to keep the trade open, knowing that either the news is going to be in favor of us or not. Since it wasn't in favor of us, it was a loss. Usually what happens is when the news gets released, you'll have a spike in the opposite direction rather than the intended direction, and at that point you can easily get out break even or take a small profit. However, in this case it didn't work out that way, and I took pretty much an immediate loss upon the news release, which we can see right here. Perhaps if I just hide this temporarily, so you can see this was the 3:15 news release, and we had this big wick, after which price came down. So not exactly in our favor, but that's fine. And that was a valid loss, so I'm happy with that. It fit my trading plan and all of my rule sets. Nothing about it was judgmental. Then as we moved further into the New York session, obviously now shorts are completely off the cards, and so are longs. Longs are off the cards because obviously we've got negative longs are off the cards because now we're interacting with a new 4H barrier with not enough time to build that IRL. So that wasn't ideal for any long trades because we got the significant barrier to deal with, and then obviously shorts are completely off the cards because it doesn't align with any of the news releases, and thus we can't validate that any New York high of the day will actually hold. So having said all of that, I essentially ended the day with one loss. That's pretty much my end of day review. I hope it makes sense, and we'll chat again for the London outlook tomorrow.